Oh, hello guys. Today we'll be talking about why momentum investing works. So, the basic answer to that in a short phrase is that it has more ruthless execution. So, let's first find out what makes a good fund manager. So, you will observe if you see the track record of all the best fund managers that they never average down. They usually have their biggest winners when they average up. So थोड़े exception होंगे इसके, of course, like everything, सबका investing style different होता है. But as a general rule, all traders will always average up, never down. And most good investors, like very long-term investors, also will not average down. I mean, at least that won't be the sole reason that they buy a stock that it has fallen down, right? Okay, so first of all, why does an index fund work in the first place? So, to understand it, Nifty 500 अगर हम लें, so this index is made up of top 500 stocks and उनका जो weight है, that is in the order of their market cap. That's pretty simple. So what this index does is कि जो भी market में dynamics change होते हैं, which lead to price changes and therefore market cap changes, so उसको रिफ्लेक्ट करता है ये इन द सेंस ऑफ रिवॉर्डिंग विनर्स. So if let's say Reliance is the top holding, just for example, or it's okay, Reliance is the top holding. So if Reliance does very well, है ना, तो उसका market cap will go up most likely, and then जो उसका weight होगा in this index that will be higher. अभी भी काफी high है, but it will be even higher. But the same way, if Reliance does not do very well, उसका जब next rebalancing होगी, automatically weight कम हो जाएगा. So let's assume for now that Reliance just keeps on declining, है ना? अभी ये top holding है and it just keeps on doing very very bad. तो what will happen is कि gradually वो number 2 पे आएगा, 3 पे, 4 पे and all the way to 500 till वो index से निकल जाएगा. But this process is very very painful because the index did cut the loser. मतलब उसने धीरे धीरे रिलायंस का वेट कम करा हर क्वार्टर, बट still it had a very big losing position initially at least, and it kept on riding the loser. But it's better than just adding to it, of course, a loser. But still, it's not the best way to go about it. So you might argue that a very good fund manager managing this fund, let's say not an index fund but an active fund, would have cut this बहुत पहले. So this is why market cap weighted indexes work, because they average up, they average winners, and they cut losers, or they at least decrease allocation until they cut them entirely if they underperform enough. But momentum indexes is like the same index but on steroids. Why? Because there is much less tolerance for underperformance, and even जो उसका weight होता है, that weight is not linked just to market cap. Of course, that's a factor in considering the weights, but market cap से ज़्यादा they would focus on the most important thing, which is market cap appreciation. So if let's say Trent, which just entered Nifty 50, uh, let's take Nifty 50, है ना? So if Trent is part of Nifty 50, abhi it is the lowest holding, but as it does well, uska weight would be the highest when it becomes a very very big company, right? If it does, that is. But momentum index में क्या होगा कि if Trent is performing much better than let's say Reliance, so the index says कि the philosophy of the index says कि Reliance को ऊपर क्यों रखना, because just because it's a big company. Sure, it's a bigger company than Trent and probably will be forever, but that does not warrant a higher place in the portfolio. I mean, Reliance has been underperforming for the many years. So Reliance will not have a place in any momentum indexes which get rebalanced even every 4 years, while Trent will have a position in most of them. And what if Trent stops doing well and Reliance starts doing very, very well? So the momentum index will not discriminate again based on market cap, and regardless वो Reliance को सबसे ऊपर रखेगा and Trent का weight काट देगा, or maybe just हटा देगा. So a broad market momentum index fund makes sure that no matter where the bull market is, it could be that next year only small caps, only mid caps, or only large caps, or only a sector performs or performs the best. It does not matter. In, let's say, a quarter or two, the momentum index will identify those winners pretty reasonably. It won't be the earliest, of course, but pretty in reasonable time, and then just ride them till they do well. And as soon as they stop doing well, it will cut weights very ruthlessly, much more ruthlessly than a market cap weighted index. So when it comes to performance, of course, so momentum indexes have not been around in India since a long time. You will see that the base data is 2005, but it is more like back tested data. It is not like you could have invested in this index through any instrument back in 2005. But if you had, and if someone had made a fund and followed the philosophy of this index exactly, and not had to pay any tax, then the returns for the past 20 years would have been 21.75% annualized. So this is as on January 31st, 2025, which is very recent. And in the same time, if you had invested in just a market cap weighted fund of Nifty 500, you would have made still cool 13.5%. So as you can see, there is absolutely no comparison. So in some countries, this factor of momentum tends to work very well, while in the others, it still performs better than the market cap weighted counterparts, but the difference is less stark. So the main theme I've noticed is the overall markets need to do very well. So in a growing country, let's say like India, or let's say a very long term positive market like the US. So even in the US, the momentum factor has outperformed pretty significantly. That is in the last 10 years. Also, recently there have been many index funds that track the momentum indexes. So there are two main in India. There's this Nifty 200 momentum 30, and there's this Nifty 500 momentum 50 index fund, and you can just use any index fund. And this is not a buy or sell recommendation, of course. I would not want you to risk your money without knowing or consulting your financial advisor about it. So the thing with index funds is because they are in tax efficient instruments like a mutual fund, you will save a lot of money just not trying to emulate the index yourself, but just going in a mutual fund. So, last thing to address, I have many people that have talked to me about this, and they bring up the fact that why, just follow price. We are fundamental based investors. I want to have an index that tracks the earnings growth of the company and, basically follows the earnings momentum, the underlying earnings momentum, and not the stock price momentum. So at first, this may sound like a good idea. It did not to me though, because of the simple reason that everything is in the price. So every information, every earnings growth momentum you're talking about, that is already in the price, right? The consensus opinion about that outlook, of course, is in the price. And okay, let's say a company has been increasing its earnings by 100% every year. So your momentum fund based on earnings growth momentum will have a very high allocation towards it. And let's say this quarter also it has done 100%, but the management has just reduced the guidance to a 10% next year due to some unforeseen circumstances. Your momentum index is only looking at the earnings, and it does not have the 10% future earnings data, of course, because it hasn't happened yet. So it does not cut the weight, even though the market prices all of this in, and the price just falls like a falling knife. But your fund could not exit it. And in the same manner, before there is earnings visibility, let's say the management gives some positive commentary that, okay, next year seems very optimistic, the price would have increased a lot, and your momentum fund based on earnings growth would not have got this until it is very, very late. And at that time, the management might give a negative commentary when you add the stock, maybe at the top. So this is just a sure way to, lag behind what's actually happening in the market. And the price is a very reliable way to not be lagging by a lot. So this was a very brief explanation of why momentum investing works. This is actually also how a lot of very good trading strategies are formulated, that you buy breakouts, you buy good performance, you sell into strength, or cut your losses after a slight decline, after your stop loss is hit. So a momentum index fund basically allows you to do all of this in a tax protected instrument with fees as low as 0.2%, if you go for the direct route, that is. So I personally feel that it is worth a look, and it probably deserves a place in a lot of portfolios. But again, it is not financial advice, and as always, thanks for watching.